Well, hello, this is Jeremy North with your educational and economic update for November of 2021. In this month's video, I'll discuss not only major headlines that influence markets in October, but also what we expect to influence markets in November. Please stay tuned at the end of this video for the always exciting required disclosure statement. Well, after a bad September with the worst returns for the year to date, the stock market made a great comeback in October with the S&P 500 making up its September loss and then some, with a 6.9% return. More than half of the S&P 500 companies reported earnings for the third quarter, and 82% beat the Wall Street estimates. This good corporate earnings report, along with the continued economic recovery across the world, led the Dow gaining 5.84% and the NASDAQ Composite adding 7% in October for the best month of the year. The aggregate bond index was down again by a very tiny fraction, and the entire yield curve flattened somewhat in October as questions were raised about how quickly the Fed would be ratcheting interest rates higher. However, rather than create a panic like they did in 2013, the announcement was widely expected as the Fed had been signaling it would begin to taper soon. The markets were expecting this news, and as such, any concerns were really already priced into the market, causing little, if any, market volatility. As we reported last month, the fourth quarter is typically positive, and although the U.S. economy grew at only 2% in the third quarter, down from the prior 4 quarters, many analysts felt that this quarter still should be a good one. Initial unemployment numbers came out on November 5th, and the news was excellent as over 531,000 new jobs were created. This is a big jump from September and is attributed to the end of the extra unemployment payments, higher vaccination rates, and a slowing of COVID infections and deaths, all allowing more businesses to open fully back up. With investors feeling more optimistic, caution still remains as we have huge supply chain issues and inflation is at a 13-year high. But as we said last month, some issues can actually be good for stocks, and proof of that old adage, markets climb and a wall of worry, appear to be kicking in again. If you have any questions about how the recent economic reports could impact your long-term goals, I am here to talk. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 636-896-4052. With all that being said, here's the disclosure I'm required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again. This is Jeremy North signing out for the month of October. Have a wonderful November and have a great Thanksgiving, one of my favorite holidays, and I look forward to seeing you next month. Take care. Bye-bye.